So the meeting is getting recorded. Let's start. Prepare a cash budget for the month of May, June and July 2020 on the basis of the following information. So they have given you details from March to August. And the additional information that is given. So let's start making it. They want it only for 3 months. So first we need to draw a cash budget for 3 months for the month of May, June and July with cash receipts and cash payments. So first point that is given is cash balance on 1st May 2020 is rupees 8,000. Now that is basically opening balance of cash which we will be taking at a later stage. Let's go to the next. Plant costing. Plant costing rupees 16,000 is due for delivery in July. Payable 10% on delivery and the rest after 3 months. So it is due for delivery in July. That means we have to make payment in July. How much we have to pay? We have to pay only 10% on delivery. So in the month of July, we have to pay only 10% and the remaining amount is to be paid after 3 months. So it will be under payments. You can write plant purchase and they have said only 10% has to be paid on delivery. So 10% of cost. You have purchased it for 16,000. 10% of 16,000 will be 1,600, which is to be paid in July, and the remaining amount after 3 months. So we are not preparing cash budget for that period. So we'll only enter this 16,000. Is the font clearly visible in the Excel sheet, or should I increase the font size?
It's visible, ma'am.
Oh.
Ma'am,
So finish the first point we have entered. Any doubts with this plant purchase? Why only 1,600 we have taken? Anybody, any doubts? Okay. Advance tax of rupees 8,000 each is payable in March and June. So payable means it will again go in the payment side and we are paying advance tax. It is payable in March and June. So for March, we are not preparing a cash budget. We're not bothered of March. Here we are bothered of June because June is in the purview of our cash budget and we have to pay 8,000 rupees in the month of June. Next. Period of credit allowed by suppliers is 2 months and to customers is 1 month. So customers basically are nothing but our credit sales. So we are giving 1 month credit to our credit sales. So whenever we sell, we are going to receive money after 1 month. That means March sales would be received in April. So it is something like this. Whatever you're selling in March, you will pay in April. Whatever you're selling in April, you will pay in May. Whatever you're selling in May, you'll pay in June. June will be paid in July and July will be paid in August. So this is how the payment structure will look like. You're going to pay in the coming months. So that's how we will work on it now. Let's see. So 60,000 of March will be paid in April, but we are not preparing cash budget for April, so we are not entering it. April 62,000 will be paid in May. We have a cash budget for May. So April 62,000, I will show it in May. And this is nothing but collection from debtors, or you can also call it as accounts receivable. So April 62,000 in May we received. Then May 65,000 will receive it in June. And June 58,000 will receive it in July. Okay, apart from this, the July one will go to August, but we are not preparing the August thing. So that's why we are stopping it here, and into bracket you can mention 1 month was the time lag. So 1 month period we are delaying in payment. Okay. They've said period of credit allowed by suppliers is 2 months. Suppliers means credit purchases. So if you have purchased today, you can pay after 2 months. That means if you have purchased in March, you will pay in May. So March, April, 2 months we will leave. So see here, whatever you purchased in March, you're going to pay it in May. What you're purchasing in April, you're going to pay it after 2 months. That is April, May you will leave, you will pay it in June. What you have purchased in May, you will pay it in July. And what you have purchased in June, you will pay it in August. So this is how the cycle will go. So I hope it is clear as to how we are working. We are taking it 2 months away. Okay, so this June is paid in August. So now we have to see what we are paying in May, June, July. So March, we are paying it in May. So 36,000 of March. So here you write payment of purchases. March 36,000 we are paying it in May. April 38,000 we are paying it in June after 2 months. So April and May you leave, and June you make the payment. And May 33,000 we'll pay it in July. So May 33,000 we are paying it in July. Any doubts still here, anybody?
No, ma'am.
Okay.
No, ma'am.
Next, lag in payment of manufacturing expenses is half month. Now, what is this half month? We'll have to understand. So first, listen to me carefully and then we will solve it. What they're trying to say here is, suppose you're working for 30 days in an organization. When you work from 1st to 15th, that is half month. For that half month, you will get salary on 16th of that month. Then when you work from 16th to 31st, you will get salary in the next month on 1st. So this month's salary, half I will get in this month only, and the rest half I will get in the next month, in the beginning of the next month. Is the logic clear?
Yes, ma'am.
So from 1st to 15 you work, you take the salary on 16. From 16 to 31st you work and you take the salary on 1st of the next month. So that is how we will have to show it, half in the current month and half in the next month. Okay, so let's see how we are going to write it here. So write manufacturing expenses and the time lag is half month. So while you record it, you can say half current month and half next month. Okay, so how is this half going to work? Let's see. So I'm recording it here below. Now we're talking of manufacturing expenses. 4,000 rupees is manufacturing expenses. So out of this 4,000, 2,000 rupees you will receive in the month of March only. Sorry. $2,000 you will receive here only, and the remaining 2,000 you will receive in April. So March month manufacturing expenses, half in March, half in April. We are not preparing cash budget for March, April, so we are not recording it. Now see what happens to April month. How much is your wages and salaries for April? Anybody? It is 3,000, right? So of that 3,000, 1,500 you will receive in April only, and the remaining 1,500 you will receive in May. So this 1,500 of May is important, which we have to take. Okay, so where will I take it? I'm going to take it here in that next month figure, because it is not May manufacturing expenses, it is April manufacturing expenses. For April, next month is May. So we are taking it in the next month of April. Okay, so what we will take here in the current month. What is the May salary? The May salary is 4,500. So of that 4,500, half we are going to take in May, and the rest half we are going to take it in April. So 4,000, sorry, May and June. So 4,500 half if you take, it is 2,250. So we are going to take 2,250 in the current month and 2,250 in the next month. So next month of May is June. Are you all getting the logic as to how I'm doing it?
Yes, ma'am.
Yes, ma'am.
June salary, June it is, sorry, June manufacturing expenses, it is 3,500. Half of 3,500 in June only, so that is 1,750. So current month 1,750 and next month 1,750. And when you go to July, 4,000 is manufacturing expenses. Current month half, so 2,000 is half, and the next month is August, which we are not preparing, so we are not recording. Now, one thing I wanted to know from you, you want to call this as next month or previous month, because this is the confusion that I face in every batch. If I look at May month, May, current month, and next month will go in June. But if I look at June, this is previous month. I mean, of May, it has come to June. So should we write here as previous month or next month? Which is more better understanding for you?
Previous month, ma'am.
Previous month, ma'am.
Previous month, ma'am.
So we'll call it as previous month. So current month's 2,250.
Previous month.
Yeah, and previous month's 1,500. That is April. So here, current month 1,750 of June and previous May 2,250. So after this, in all the sums, we'll call it as current month and previous month instead of next month. Any doubts with this expense part? Is it understood how we did half-half? Okay. Next, lag in payment of office and selling expenses is 1 month. So office and selling expenses, here is office expense and here selling, both will be paid 1 month later. So we'll write it here, office expense. And selling expense. So how it's going to work now? Office and selling expenses will be paid 1 month later. So whatever is of March will be paid in April. April will be paid in May. May will be paid in June. June will be paid in July. And July will be paid in August. Similar way for selling. March will be paid in April. April will be paid in May. May will be paid in June. And June will be paid in July. And July in August. So this is how it will actually go. So March 2000 will be paid in April. We are not preparing April cash budget. So we are not writing it. April 1,500 will be paid in May. So this 1,500 of April, we'll have to record it in May for office expenses. May 2,500 will be paid in June. So in the month of June, we are taking 2,500. And June 2,000 will be paid in July. So we'll take it in the July month. Next, selling expenses. April will be paid in May. So April it is 5,000. So that 5,000 we take it in May. May will be paid in June. May it is 4,500 that will be paid in June, and June will be paid in July. So June it was 3,500 which will be paid in July. So we have recorded all these. Now we'll have to understand how it would work. Okay, so all the things have been taken or no, we'll have to check. So we have finished all these. I'm marking them in red so that we are clear that we have finished all this. Only this opening stock thing is left. And if you look at here, we have finished credit sales, credit purchases, manufacturing expense, office and selling. Only wages is left. About wages, no adjustment is given. So when no adjustment is given, what should we do? We should record it as it is. So for May, wages is 10,000. I'll take it as 10,000 only. For June, 8,500, and for July, 9,500. So whatever is given for those 3 months, we are going to record it because there is no adjustment or no time lag mentioned. So when there is no time lag, that means the wages are paid on time. So May month 10,000, June month 8,500, and July 9,500 are paid on time. That means it is paid in that respective month itself. So I've taken 10, 8,500 and 9,500. So this was about the entire problem. Now what we have to do, we have to take the opening balance after finding the surplus or deficit and then find the closing balance. So first we will add it. So we call it as total of A. That is the total of receipts. Same total will come because there's only one item. Okay, then we'll write total of B. That is your payments. So we'll add all this. So we have added. Now we have total of A and B, that is receipts and payments. So we can find surplus or deficit. So we have to do A minus B, that is receipt minus payment, to find whether we have surplus or deficit. 62,000 minus 56,250. We have surplus of 5,750 for May. 65,000 minus 65,500. We have a deficit of 500 in June. And 58,000 minus 53,350. We have a surplus of 4,650 in July. To this surplus or deficit that we have found out, now we will add opening balance. So that we get closing balance. So they have given opening balance, cash balance on 1st May 2020 is rupees 8,000. So opening balance of cash for May month is 8,000. When you add these two, that is surplus and opening balance, you will get the closing balance, that is 13,750. Closing balance 13,750 of May becomes opening balance for June. So from 13,750 surplus, you minus, opening balance minus 500 deficit, you will get 13,250. This becomes opening balance for July. So July 13,250 plus surplus 4,650. 17,900 is your closing balance. So this is what is the final answer, and this is your surplus or deficit. Any doubts in this problem, anybody?
No, ma'am.
No, ma'am.
So let's start with the next problem.
No, ma'am.
The fourth problem we'll begin with. From the following forecast of income and expenditure, prepare a cash budget for the month January to April. So we have to prepare it for 4 months from January to April. Particulars. First, we record the cash receipts. We call it as A. Leave 5 to 6 lines. For cash receipts, and then take the cash payments. So let's start with the problem. They've given you the details from November to April of all the expenses. The customers are allowed credit period of 2 months. So we are going to give 2 months credit to the customers. Customers are nothing but the person to whom we have sold goods. So credit sales will be getting 2 months credit. So when it is 2 months credit, that means whatever you have sold in November will be paid in January. After 2 months, that is November, December will be the gap. November will be paid in January after 2 months. Then December will be paid in February. So December credit sales will be paid in Feb. January will be paid in March. Jan, Feb, 2 months you have to leave gap, and March will be paid in April. So this is how it has to be paid. So let's record it the same way. Call it collection from debtors, and we're giving 2 months time. So November we receive in January. November 60,000. You're going to get it in January 60,000. December 70,000 you're going to receive in February. January 50,000 you're going to receive it in March. And February 60,000 you're going to receive it in April. So this is how you receive money from credit sales. So first point is done. Next, a dividend of rupees 20,000 is payable in the month of April. So payable means it will go in the payment side, and the first payment that we are making is dividend. We are paying it in the month of April, so only in the month of April you record it as 20,000. Plant purchased on 15 Jan rupees 10,000. So you are going to write it here. Plant purchase on 15 January. So January month you have purchased it 10,000 rupees. You recorded that. Then a building is purchased. The payments are to be made in March and April of rupees 4,000 each. So a building is purchased. So this payment side again. And March and April we have to make payment. So purchase of building in the month of March 4,000 and in the month of April 4,000. The creditors are allowing credit of 2 months. So creditors we basically mean the purchases. So whatever you have purchased you can pay after 2 months. They are giving you credit of 2 months. So how it will work we'll see. So what you have purchased in November, you can pay it after 2 months. So November, December you leave and you can pay it in January. What you purchased in December, 40,000, you can pay it in February. What you have purchased in January, 30,000, you can pay it in March. And what you have purchased in February, you can pay it in April. So after 2 months. So November purchase, I'm leaving November, December, and I'm paying it in Jan. December 40,000, I'm leaving December, January, and paying it in Feb. So 2 months gap we have to keep and we have to make the payments. So credit purchases. So you write here payment for purchases. Two months lag. So November we had purchased 30,000 which we will pay in January. November, December we leave and January we pay after 2 months. December 40,000 what you purchased you will pay it in February. So December's will be paid in Feb after 2 months. Then January 30,000 what you purchased will be paid in March. And February 40,000 what you purchased will be paid in April. So this is how the purchases are being paid after a lag of 2 months. Finished till here. Wages are paid with a lag of 15 days. So we are again here, if you observe, wages are to be paid half monthly with a lag of 15 days means half month. So like we did in the previous sum, half in the current month and half of the previous month, the same way we will do it. So we write here wages. Below that we write current month half. And as you said in the previous problem, we'll write previous month half. So this is how the wages we will be recording. So current month half, that means January month, whatever are the wages, half of that. January wages are 5,000, half is 2,500. And the remaining half will go to Feb. Now January's previous month is December. Wages of December were 6,400. Half of that is to be paid in Jan. So 6,400's half will be 3,200. So January is done. February wages 6,000. Half in this month, that is 3,000. And half will go in the next month, that is March. For March it is previous month actually. Then
Ma'am,
see what happened. Yes. Tell me. Any doubts, anybody?
No, ma'am.
So Feb we finished. March 4,800 we are going to pay in the current month. Half of it, 4,800 half is 2,400. April wages are 5,200. Half of that will be 2,600. And the remaining half would go to May, but we are not preparing for May. So this is how we will take it. So this is wages, current month and previous month half. The next adjustment, lag in payment of other expenses is 1 month. So 1 month we are taking for other expenses. We'll see which are the other expenses. Manufacturing, admin and selling. All these three expenses we will pay 1 month late. So manufacturing expenses. Admin expenses and selling expenses. So we'll be paying 1 month later. That means we are going to pay November's in December. So manufacturing expenses of November in December, December in Jan, Jan in Feb, Feb in March, and March in April. Same will continue for all the other. So November and December and so on so forth for all the three. So this is how we are going to pay manufacturing expenses. So this November in December, December we are not recording, December in Jan. So it's going to be next 2080 admin expense of December in Jan. So 2080 2,200 of Jan in Feb. So 2,200 here. 2,300 of Feb in March. And 2,440 of March in April of admin expenses. Similarly, selling expenses 1,100 of December will be paid in Jan. 1,200 of Jan will be paid in Feb. 1,240 of Feb will be paid in March. 1,240. March 1,140 will be paid in April. So this is how we have paid all the other expenses. Okay, now let's see what is left. So we've completed all the adjustments. And if you look at the table also, we have recorded all
Ma'am?
the things. Yes. Tell me.
Ma'am, will you please explain this 6 point once again?
Sixth point. Wages are paid with lag of 15 days. Okay. Now when I say with the lag of 15 days, it basically means first 15 days, when you work from 1st to 15th, your salary you will get in on 16th of that month. Then when you work from 16th to 31st, you will get salary on 1st of the next month. That means half I'm going to receive in this month, half I'm going to receive in next month. That is what is the logic. Is that clear? So now how
Yes,
have we calculated? So for January, I have to receive, I'll go to wages. January 5,000 is the wages. Half I'll receive in Jan only. So current month I have taken 2,500, half of 5,000 rupees. Now here I have to receive December's wages. So that's why I've written it as previous month, because in December I might have received half, remaining half will go to Jan. So December's half I have to record here. December it was 6,400. Half of it is 2,200. Sorry, 3,200. So that's why we have written here previous month. Now let's come here in February. 6,000 was the wages. Half we'll receive in Feb only, which is 3,000. And January only half we had given, that is 2,500 out of 5,000. Remaining half 2,500 we have to pay in Feb. So February is getting half of Feb salary and half of Jan salary, which is the previous month. Same way in March we will receive half of March salary and remaining half of Feb salary, which was the previous month for March. Is that clear, Sneha?
Yes, ma'am.
Anybody else having any other doubts? Okay, so we have recorded everything. Only the last point left is balance of cash in hand on 1st January is 30,000 and minimum cash required is 35,000. So what is this minimum and how are we going to solve this? We will see. So let's first find the total. Total of A, that is the cash receipts. It will be same because we have only one entry in the receipt side. Then total of B, cash payments. So we need to add all the expenses. So these are the payments and these are the receipts. Now we'll find surplus or deficit. For which we do A minus B. So 60,000 is the receipt minus 51,330 is the payment. So you have a surplus of 8,670 for Jan. February 70,000 is the receipt minus 50,880 payment. You have a surplus of 19,120 for Feb. March 50,000 is the receipt minus 45,040 payment. You have a surplus of 4,960. April 60,000 is the receipt minus 74,400 payment. So you get 14,780 as your deficit. So this is how the surplus or deficit is actually working. Now what we have to do, the next step is to add the opening balance. So we write here add So they've given you the opening balance for January is 30,000. So we take here 30,000 for January. You will get closing balance. So if you add surplus with opening balance, your closing balance is 38,670. Now let's see what is that given. Minimum cash required is 35,000. That basically means the company is willing to keep 35,000 every month as cash balance. Now see what is the closing balance for January. It is 38,670, which is much above than the minimum. Minimum we had to keep 35, but we have 38,670. That means we are meeting our target of 35,000. Now this closing balance 38,670 will become the opening balance for February, and the closing balance for February will be, by adding the surplus, you get 57,790. Here also we are above 35,000. That means we are meeting the company's target of having minimum cash balance of 35. 57,790 will become the opening balance for March. So when you add surplus to 57,790, add the surplus of 4,960, you will get the closing balance of 62,750. This becomes opening balance for April. Now from 62,750, you need to minus the deficit of 14,780. So you get 47,970. Now this is your closing balance. You just observe your closing balance carefully. In the closing balance column, all the balances are above 35,000. None of it is below 35,000. That means the company has met its minimum cash requirement of 35,000. Now, if it was below 35,000, what we would have done? When it is below 35,000, then the company borrows money because it needs to keep that much minimum. And you have to show the borrowing interest and all that part only if it is told to show. Otherwise, we will just say company is not meeting its minimum cash requirement. If they tell you that you can borrow when there is less money or you can invest when there is more money, we will do the borrowing and investment part of it, which is there in the next problem which I will be solving. Any doubts, anybody till here? Was that clear?
Yes, ma'am.
Okay.